Ladies and gentlemen, Tesla could be heading to new all-time highs. I will share the latest info with you that we have and what you need to know to really marinate this over the weekend, because what a beautiful last couple of days of trading for Tesla stock. Tesla closed today at $322 per share, up 8.45% today, which is the first time Tesla's been over a $1 trillion market cap since 2022, back in April, in fact. And the last time Tesla broke above $300 with this kind of momentum, the stock did, in fact, go back to new all-time highs. And there is a very, I guess, reasonable case for new all-time highs, for maybe even much higher than new all-time highs. Maybe $500-$600 per share could be reasonably argued with a longer term outlook. Now, this is not to say $500-$600 per share is guaranteed by any means. Nothing is guaranteed in the land of finance. We could have a black swan event tomorrow, okay? But the odds are tilting in our favor of maybe more upside, maybe a lot more upside, and that is worth discussing. There is, to a certain degree, a perfect storm for Tesla stock between Trump winning the election, Elon and Trump being very close these days, favorable policies that could come out of that. Earnings just got out the way. We just got a lot of big economic data within the last week and a half. We just got the Fed. We're in a seasonally bullish period for the markets. I mean, there is really no bear case besides valuations. And as I explained in the last video, let me just grab the book here. All right. In this book, it explains in at least one part of the book, The Psychology of Money, that really market valuations are a subject to people's horizons. Okay. If you're a day trader, you are buying a stock and selling a stock within a single day. If a lot of people are doing that, then you could see the markets go up a lot. Okay. It's really not about valuations to a certain extent. When you see longer term investors, like perhaps what you've seen from like 1930 through 1970, that buy and hold stocks, valuations are going to be lower because it's based on a fundamental practice. These days, as markets go higher and higher, you get more people that kind of flip without even realizing they're doing it, from long-term investors to kind of medium-term investors, like 3-6 month investors. Momentum traders, if you will, following the trend, okay? And I see a lot of that happening today. People buy a stock because it's doing well. They sell a stock when it starts doing poorly. Well, there is no arguing that Tesla is doing very well right now. And valuations don't necessarily matter when a stock is doing very well. That's why you have seen stocks do incredibly well, go up thousands of percent. Look at Carvana. Carvana is probably the greatest example of this in recent history. Look at Carvana stock. Carvana in 2023 was a $7 stock. Today, it's $245 per share. Carvana, about a year and a half ago, 18 months ago, it has went up 35-fold. Okay, 3,500,000%. It's way up there, okay? Thousands of percents. You had a lot of, overvalued, activity, valuations within Carvana during this time. But the stock grew into those valuations, and nothing disrupted it along the way, which allowed it to become the company it is today. Now, you can make an argument that Carvana is overvalued, but does it matter when the trend is clearly upwards and people are betting on that trend? I would argue probably not, at least in the near term. Over the next 10 years, of course, valuations will matter. In the very near term, if we're talking months here, it doesn't really matter. And that's important for Tesla because, yes, can you make a justifiable valuation case for Tesla today? Yes, you can. But it's not based on anything that's going to happen over the next 12 months. With Tesla's valuation where it is, PE multiples at about 100, you really have to look out a ways. And that's what investors are starting to do. They're starting to say Tesla is going to grow into these valuations, that Tesla, maybe buying Tesla at 100 times PE today is like buying Tesla at a 50 times PE next year, because Tesla will grow into that. So from a valuation standpoint, don't worry about that. Okay, Tesla's valuation could rocket higher from here. I don't even think you're getting into kind of speculation or extreme risk taking kind of valuations. After all, Tesla was over this price roughly in April of 2023, after 2022, after we had started to go through some of the tumult in early 2022. Now, Tesla hit an all-time high at $414.50 per share. And honestly, let me just say it, I think it's coming. Because of the perfect storm that we have in front of us. I mean, just beyond all the things I mentioned, Trump, the election, favorable business policies, inflation that's falling, the Fed that is cutting rates, earnings season that just ended, which was pretty good, the economy holding up, so many different things. It's you need two hands to count all of the positives going for markets right now. But from that perspective, there's not a lot to stop Tesla in the near term from going higher. Because if you just broaden out your horizon to what Optimus is going to be, what full self-driving and robotaxi is going to become over the coming years, you can come to a reasonable valuation that is a lot higher than where Tesla trades today, especially considering robotaxis should be a 50% net margin plus business, could be 75%, like a Google or a Microsoft for that matter. I mean, if you get a good market share of that, if you expand across America with that, the valuation could be insane. Right? And it's just about how much future return are markets willing to price in today. Now, that's the fundamental picture. That's different from the momentum picture. They're two different things. And both of them are completely different. Okay? Momentum could be a meme stock. It could be a stock that goes up 200% in a day off of insider buying or some bullshit catalyst, right? Tesla definitely has the momentum. So let's stick with that. Tesla, momentum, yes, A-okay. But from a fundamental perspective as well, people can say, this is not a too unreasonable price to buy Tesla if I have a 2-3 year time horizon. Okay, so that makes it more justifiable from investors' perspective. Now, today was really a standout day because you didn't have many stocks that were actually outperforming the markets. On a relative basis, it was kind of a muted day relative to some of the other days that we have seen. Now, yes, the equal weight S&P went up about 0.6%, but if you look at the percent of stocks currently trading above their 50-day moving average, today you actually had almost 1% of stocks fall below their 50-day moving average. So there was a lot of decliners on the day today, which really helps, Tesla stand out as a stock that is really outperforming. And from a momentum standpoint, that is obviously great for your investment in Tesla stock. It's likely to draw in many more people, kind of like, these cruise employees. I'm on a cruise right now, if you haven't noticed. Cruise employees will start dancing or doing whatever they're doing, and people kind of crowd around it. Same thing for Tesla. Tesla is doing its upside dance, and people are definitely starting to pay attention. Now, here on the day today, you had 725 different trades from hedge funds and institutions, totaling $1.16 billion with a positive order value of 90%. Hedge funds and institutions having a 90% positive order value is crazy. Just imagine what retail investors did as well. That's where things kind of get nutty. There was very optimistic positioning in Tesla today. Now, I don't think that's unwarranted. I think that is warranted, but you're definitely getting into pretty bullish territory there. Short interest of free float 2.84%, $23.52 billion sold short in Tesla stock. Considering today, you went up about $24.50 per share or so. That does mean that short sellers lost about $1.94 billion. So add that to the $23.5 billion total, you're pushing about $95 billion. That's a big loss that shorts have. So from the momentum standpoint, there's a lot of fuel on the fire. It's like the gasoline can just started dripping on the fire, and there's a whole lot more gasoline, okay? There's 79.22 million shares of gasoline, if you will, ready to ignite the stock even higher. And I think with the setup that we have into year end with bullish seasonals, that is most likely what you are setting up for. Now, I also want to remind you that Tesla's basically went straight up in the last couple of days. Now, yes, this is kind of small relative to Tesla's price action in the past, right? Tesla was a $414 stock, and it's been as low as $102 per share. But there will be a moment in time when you get some consolidation, when you get, Wall Street saying, okay, the stocks run a lot. Some people are going to take profits. The momentum-driven guys are going to kind of wash out of the stock a little bit. You're going to trade sideways for a period in time at some point. Question is, when does that happen? At what price does that happen at? It seems likely that we get further upside from here. Maybe 1 or 2 more big days before you get a spell of consolidation. A spell of consolidation means maybe a week, maybe 2 weeks, maybe a month, maybe 2 months. I doubt it would be that long given the bullish seasonals that we're looking at into year end. But that's what you need to be prepared for when this rally does slow down. Now, take a listen to what Tom Lee says about the broader stock market and what is coming next. He thinks 5 to 10% upside is his base case throughout the rest of this year. Tesla tends to have a 2.5 times beta compared to the markets. That would mean 12 to 25%, potential upside for Tesla, kind of as a base case.
It's now in the markets. Tom Lee, head of research at Fundstrat Global Advisors, chief investment officer at Fundstrat Capital. And the list goes on. And he's a CNBC contributor. First post-election appearance that we've had. You knew Trump was going to win.
Well,
not many people did.
Yes, that's.
I'll give you credit. Are you saying you didn't? Maybe you didn't say it in so many words, but you said it.
Yes, I'd say that we were placing a lot more weight on what the betting markets were pointing to, and so and we, when we look at all the deltas,
and you saw it in the Trump trade,
yes.
And you saw it in Bitcoin,
correct,
and you saw it in sectors of the market that would benefit from.
That's right.
Presumably, but who knows from a Trump presidency. So 1,500 points a meet out of the gate. More to come, or are we're already there?
I think we need to respect this move. I mean, there was a tremendous rally post-election, and it continued yesterday. I think it really does reflect a lot of money was taken out of the market because of the uncertainty around the election. And now we know that because of policy changes and animal spirits, that this is really going to benefit things like Bitcoin and small caps and regional banks and financials. So I do think there's still a lot of upside. I mean, small caps trade at 10 times median forward earnings. I mean, that's a...
So what do you think that should be, 12 times? And what's the opportunity set in your mind?
Well, since 1987, small caps traded on a median PE basis at a premium to the S&P. The S&P is at 17 times. So I think small caps could, in the next couple years, outperform by more than 100%.
And what do you think about some of the macro issues that I think create a different level of uncertainty? We keep talking about the bond market and what that might be saying, what you think is happening with gold. Are the bond vigilantes going to be this governor on whatever you think is going to happen in Washington?
As James Carville famously said, the bond market is, everyone's scared of the bond market. So that is something we need to watch. But we've had plenty of periods where stocks have risen with bonds rising. And I kind of agree with Powell's assessment that it's not yields have gone up not because of inflation, but because there's sort of a change in growth expectations.
I thought that a sweep was, for either party, was the death knell for the markets and frightening to all involved. And now we're getting a sweep. Why isn't it more frightening? Maybe a sweep the other way would have been a little more frightening to some.
Yeah. I mean, I think part of the reason investors are getting somewhat optimistic is that President Trump is entering office again, but this time with a lot more knowledge of how to build a cabinet and a team. And so in some ways, this would end up being more market friendly. And I think that's why investors are becoming optimistic. I mean, I kind of agree with the idea that there are animal spirits growing.
He'll never be deficit friendly, will he? I mean, he will be deficit friendly. He won't be, if we cut taxes on tips, Social Security, overtime, remove the SALT cap, extend the tax cuts. If you do all those things, that seems like
it's going to be very difficult to fix the deficit with just changes in taxes and spending. But it's probably why Bitcoin is kind of interesting here, because it's potentially a treasury reserve asset. And, if Bitcoin rises in price, it actually helps offset the liabilities, which is the deficit.
So you were at 150, I think, on Bitcoin, weren't you? But
yeah.
Not necessarily by the end of this year, or?
I think six figures is still possible for it before the end of the year, yeah.
And then more next year and the year after?
Yeah, I think because now, post-halving and now Bitcoin's becoming a lot more relevant, and I think maybe the regulatory overhang is diminishing, that there's a lot of upside from here, yes.
Okay, S&P, end of next year.
Well, between now and year end, 5 to 10% is probably the base case, just because that's the type of rally post-election, and we have a dovish Fed and, the normal seasonals.
Is that the right move right now for the Fed?
I think inflation fighting war is largely over, and the real rate is still too high. So I agree with Fed's view that we need to move towards neutral, which is towards 3%. So I think it is supportive of markets, and business investment has been constrained. So I think these things are positive.
So what about 2000? What's next year? Is that 25? They move so fast. They're like months now, the years. So what about 2025? So 5 to 10% more would put us well above.
Yeah, more than 6,000 before year end. I think at least for the foreseeable future.
No recession.
No recession,
and people want you to answer when I ask you a question. So what are you saying? 60, what hundred on the S&P?
I think well past like 6,700.
No,
sometime next
6,700.
Yeah, sometime next year, because
that's another 20%, isn't it?
Yeah, maybe 10, 15. Yeah, because margin debt hasn't really risen in the last 4 months, and the stock market's up. So we know investors haven't been adding risk, and now we have earnings visibility, and we have a continued dovish Fed, and then this election's behind us. So multiple tailwinds exist.
Wow. You're pretty bullish.
I think I'm pretty positive on the U.S. and fundamentals, yes.
And I wish I could give you exact days that breakouts will happen or when consolidation will start. I cannot do that. I think you're getting close to a point of consolidation that will occur for Tesla, but it's really hard to say with any degree of certainty. I will tell you, things look good. If you are short, I feel bad for you. Okay, I genuinely feel bad for you if you are short in Tesla, because it's not looking good, okay, my friend? It's just not looking good. Let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.